Okay, I'll start with the points. First of all, we've seen the naira gain about 3% since the volatility, which took it to a 13-month high in late September. What are your thoughts on the stability we're seeing now?
Well, I suppose it was inevitable because what you saw in September was a surge in demand. I think demand was about $3.6 billion during the month, which was a year high. And I think that was precipitated by some panic buying and some people concerned about the prospects of the naira in the longer term. So their obligations were brought forward. The central bank was able to effectively see off that surge in demand. And now things are more stable. The demand that was front-loaded in September would have fallen due in the subsequent periods is not there anymore. So, so that has made it easier to maintain the price and has allowed naira to recover from the lows of September. So really, you would say it's a sort of a technical shift in demand over a fairly short space of time that has occasioned this naira strength and stability.
I remember when you were on the show the last time, you did mention that there's that seasonality about demand, and I think it seems to be playing out now. But let's take a look at the new policy moves that have come out. First one I noticed, the central bank's looking to stagger demand for $50 million and above in the WDAS. There's also talk of forward FX transactions, which maybe you can explain to us. And then, of course, there's the Class A BDC licenses, which have been withdrawn. Can you just give us a sense of what do you think the central bank is trying to achieve with all of this?
Well, the overarching objective of the central bank, as far as I can understand it, is to sort of stabilize the demand profile and to take away the blips that come from panic or concern about the currency, speculation, if you like, to use a favorite word of the central banks. There will always be seasonality. Sometimes there's more demand for FX than other times. But sometimes demand is skewed by psychological factors, as we saw in September, people worrying about the currency. So what the central bank has done is to improve their ability to plan for FX demand. So, for instance, if they say they want to create a forward window now, basically the way that will work is that the banks will deal with their customers. Any customers who has a future obligation and is concerned about the possibility of a naira devaluation in the interim and wants to fix his price now, that customer can enter into a forward with the bank, and then the bank is able to cover with the central bank. Now, there's a forward market existing currently. But yes, there is a forward market, but it lacks liquidity and depth, largely because in times of difficulty or crisis, everybody is on one side, i.e. everybody wants to buy dollars. So by providing that liquidity, the central bank is standing is providing a real depth to the forward market and is able to cover the bank's risks. So the banks can price their forwards better to the customers and get cover from the central bank. What that would do for the central bank is it will take away the speculative component of the demand they sometimes see and move it into the appropriate time period in which it belongs. So you won't see a bunch of people with obligations during December insisting on buying in September to cover their positions, even though it's not due for another 3 months. They'll still settle in December, but they will lock in a rate in September via the forward market. So that's the aim of that. The idea of above the 50 million figure is, well, it's always existed informally anyway. When you have a significant demand, generally the protocol is to speak with the central bank before you take it to the auction so they are aware and they can adjust for it. I don't think it's such a new policy per se. It was just more explicitly stated. It's not new per se.
What about the withdrawal of the Class A BDC licenses?
Well,
how significant is that?
I think it's more substance over form, if I'm perfectly honest. I think by withdrawing the Class A BDC licenses, what the central bank will effectively do is move some of the demand from the CBN window to the interbank window. And what will happen is, because Class A BDCs were able to buy from CBN at the DAS as well as on the interbank, Class B could only buy on the interbank. So now that there's no more Class A, the demand that was going to the central bank at the DAS window directly will end up going to the interbank. So it won't go away. My concern is that in the longer term, it may further create a greater bifurcation between the CBN rate and the interbank rate, and it may diverge a little bit. Whereas in the past, the policy was more to bring all these rates together into a unified exchange rate. We may see more variance.
Right. Okay. A very important point. Let's talk about AMCON and the bond issuances that we're anticipating and the impact it might have on the naira. I was speaking with Malcolm Gilroy from AfriInvest earlier today, and he is of the view that definitely we're going to see a spike in FGN bond yields as a result of this this new issuance from AMCON. But what impact do you think this is likely to have on the exchange rate? Because we do know that some of these banks would be discounting these bonds at the central bank window, and then once they do that, obviously that adds to the liquidity in the system.
Ideally, well, I mean, logically, you would say if they have the bonds will have some repo capabilities, so they'll be able to refinance with the central bank, which ideally would increase liquidity in the system, increase credit, ultimately increase demand, and quite possibly lead to pressure on the currency. But there are also some counter effects that one needs to think about. At some stage, the Tier 2 capital the central bank has injected into the managed institutions must go out.
Right.
And that may not be too far in the future if the talk of mergers and recapitalization is real, with AMCON taking off especially. So what they give via the window, some of it might exit the market via the repayment of the Tier 2 capital. It's a function of timing. In the near term, it does suggest that there will be extra liquidity and there could be pressure on the currency. But I imagine that the central bank might anticipate that there will be other effects that will kick in, transactions that will kick in, that will reduce that extra liquidity effect.
We have to sign out now, but very quickly, and hopefully I get a short answer on this one. Where do you see the naira closing the year? We're at 150.5 today.
At the central bank window, it won't be significantly different from where it is. I think the fun and games are over for this year, to the extent that the central bank was able to deal with what happened in September. So I think the year will close out relatively quietly. No big changes from where we are.